and good morning, everybody. Good to see everyone, and great discussions yesterday, today. I've really enjoyed sitting back and just listening to the speakers and the panels, and asante sana. So what we want to do, is it on? All right, too many clicks. All right, just a brief intro of myself. You have already had the, you know how they introduce and you're not sure they're talking about you? That's what just happened, right? But anyway, so this is me, and I'm happy today. The way I'll take the conversation is we're not going to get into a lot of tech stuff because we've already had so much of that yesterday, today, and to be honest, I'd want to actually discuss why it matters. So both the digital inclusion and financial inclusion are key if we're going to live the dream of our national anthem. And many times I feel, as a person in technology, we're pushing an agenda of just us, not justice. And you can tell I'm a patriot, yeah? So is this, when we're talking about digital inclusion and financial inclusion, and we're talking about all these APIs and so on and so forth, why should it matter? That's the question I want us to work, to go through today. This morning, I start through Paul's presentation, and he did give quite interesting statistics of the open bankings, inclusive banking, and he gave a few statistics of the landscape in Africa. And I want to give you another perspective of the same from a World Bank research that was done 2021, 2022. Basically, in sub-Saharan Africa, about 50% of adults own an account, according to this research. Individual countries, of course, fare differently. We know Southern Sudan was put at 6%, Mauritius at 91%. In Kenya, we know we are, probably around 79% or so, according to this study. But what is interesting is this: the adoption of traditional banking services is actually slow. If you look at Kenya, 2014 to 2021, there's only a 4% rise in banking services, the adoption of traditional banking services. But if you look at mobile banking, within the same period, it's a leap of about 21%. So growth of account ownership is actually being driven mainly by mobile money adoption. Some financially excluded people may not even have enough income to actually need a bank account. We have a section of the Kenyan society. They don't even have enough money to open a bank account, These are the guys who are excluded and marginalized. And we're talking about individuals, households, SMEs, and so on. So open banking is actually the driving force for innovation in the banking industry. And digital financial services are actually currently proliferating Africa. We know that, and we've seen that in the discussions we've had this morning. So what are these barriers to finance in Africa? And these, the list is exhaustive. So even though we're having financial, inclusion and we're growing in that area, we still have a long way to go. Unfortunately, these barriers are, ensuring that these access and financial, to financial services is a dream for many of us or many of our society. Not us, just us. We need to push for justice. Low financial literacy, high cost of financial products, long distance to the, bank branches. Even though Paul reminded us that branches are dying, we need to have that conversation. I'm not so sure. Limited credit, systems. There's lack of trust in traditional institutions, yes, even banks. And of course, there's also prejudice against certain groups and so on and so forth. The sad thing is that, especially among the informal sector or informal groups, they're the most vulnerable because they cannot access financial services. We have predators who are actually giving them these services. You know how it is, huh? They'll come for your chicken and your sewing machine because you cannot pay. The interest rates are really high. So if we do not have this conversation of how technology can actually accelerate financial inclusion, we'll continue to have a lot of our brothers and sisters not included. So let me just sort of remind a few people. There's a panelist who talked about here, banks and said banks and security. There's an issue, No, actually, banks are very, very keen and are regulated, and security is topmost for banks. But the financial services world is a dynamic environment, and it's characterized by all these things we've listed here. There's heightened regulatory scrutiny by the regulator. The financial institutions are obliged to stay compliant, of course, manage costs, maintain security, and trust. Trust is a big thing. Obviously, financial institutions are finding themselves in this area where, new technologies in the digital banking ecosystem is happening, and there's relentless search for additional revenue. The government is looking for ways to boost innovation and ensure everybody is participating in this financial services space. And there's constant change in customer behavior, and customer expectations. And there's one institution sitting right in there with a very conservative wall around the customer financial data. Data is a new oil, some people say. And this is where actually the issue is. It's actually about data. So because of these bottlenecks, if you look at the history of the regulation around, open banking. In Europe in the 80s, this is when the discussion started. This is not a new conversation. And then the EU decided to build some frameworks and directives around how third-party service providers will actually participate in this open banking so that we can solve this problem of this brick wall around customer data. Data is a new oil. That's why everybody is on it. So what is open banking? Basically, we've talked about open banking, so we're not going to the definition, but there is no customer data without the banks. So the banks are not going anywhere. Let's have that clear. And there is no sharing of data without the consent of the consumer. If you're doing it without the consent of the consumer, somebody will catch up with you. And of course, at the center of open banking is the APIs. We've already established that. Regulation is a key thing. We have some markets that are regulated. I don't know whether you've tried to research around the regulation around open banking. We're not, as Kenya, completely there with all the regulations and so on. Central bank, and so on are trying to work on this, and the acts are there. But if you go to the EU, they're heavily regulated. If you go to India and Japan, it's not really regulation, but they're policies, of how to promote data sharing and frameworks. If you go to another market, is probably free for all. Who are the players in open banking? You know the players, but I'm going to just break them that for you. Of course, we have the payment initiation service providers. These are the third-party providers who actually initiate the payments directly from the customer's accounts based on the customer consent. So those are the payment initiation service providers. Then you have the account information service providers, and these are the ones who access customer data, provide the customer with a single view of all the accounts, from across the whole spread. And this one also requires explicit customer consent. So obviously we know, we've talked about the central bank, is actively working on policies, and guidelines that address the digital ecosystem, financial space, and open banking. And there's an act that, you know about the National Payment Systems Act of 2014. This needs to really probably be amended to capture what open banking is really trying to, aspire to do. And of course, we have the Data Protection Act of 2019. We're probably very familiar with it, everybody in this room, because this is where we, live and make our bread. But I put it to you that I think we need clearer guidance and regulations also around data protection. And this may be required. And I'm happy that we always engage, these players to see how we can improve, on the regulatory space around open banking. I did try to talk about the history. I will not dwell on this too much. Started in the 80s, but where we are today. So these payment service directives 1 and 2 by the EU, actually we've borrowed a lot from the EU in terms of how we've done our regulation. We've borrowed a lot from South Africa and the UK, markets that are really advanced in this open banking space. But what I want to say is where we are now, open banking movement, we are a movement, has actually evolved not only to be a force of inclusion, but also an opportunity for customers, for fintechs, and also for the banks. It is an opportunity. Now, I know we've talked about APIs, but APIs are not the only technology. It's not the only technology when you're talking about open banking. There are many other tools and technologies on open banking. And this has been alluded, as the conversations are going. Everybody's talking about regulation, customer consent, integration middleware, and so on. So for the application programming interfaces, the AI, of course, they enable secure data sharing and communication between different softwares. That's what we've been discussing a lot the last 2 days. But we also have technologies around authorization and OpenID Connect. We have data aggregation platforms, very, very important. These are the ones that allow access and consolidation of financial data from various sources. Somebody this morning from Jubilee Insurance talked about, the great stuff they're doing there. Open banking, there's also open financing, a concept where it's not just banking, it's every other financial institution, including insurance, collaborating and ensuring that truly there is a democratization of financial access for everybody in our continent. Security has been mentioned, very, very important to ensure the data transmission, and protection of sensitive data and information is happening. And then the big one, KYC. KYC, that's a big one. Just to facilitate secure identity, verification, and compliance according to the KYC regulations. If you're here and you're from a bank especially, you'll know the regulators are big on this. Obviously, we have technologies around regulatory and compliance tools. These are there. There's a big one, we haven't talked a lot about it in the last 2 days, at least not in the sessions I've been in, analytics and, big data. The AIs and the, machine learning, the algorithms that go into, ensuring that we're able to have open banking. The big platforms, I will not mention them, but we know some of them, Hadoop and Spark and all that. All these provide predictive analytics so that, your risk assessment and so on is comprehensive. Of course, integration middleware, we have people who provide that solution here. We saw them yesterday. Blockchain, I haven't heard it being mentioned quite a lot when I was, in the last few days. These are the distribution ledgers that enhance transparency, security, and traceability of financial transactions. It's really important. You can imagine the ecosystem of banks and fintechs and everybody else, So blockchain is an important technology, even as we go into full open banking, to ensure that there is justice and it's not just us in financial inclusion. And then customer consent is at the heart of everything. You cannot do anything in the open banking we're talking about without customer consent. Now, I'm going to pause there and quickly switch into lending and credit, because that's what we do at Relational, and we're in the heart of these technologies I am, discussing with you today. I have a gift, and I have one question. Does somebody want to volunteer to answer before I ask? It's a good gift. Anyway, let me ask you a question. What is the one key question on a lender's mind when they're deciding or before they lend money to anybody? What is the first thing? Yes, sir. Spot on. Spot on. Come for your gift. Yes, why not? I just want everybody so that they can answer the next one. Yes. Will the borrower be able to pay my money? That's a question everybody asks. There's no other question. So open banking brings a huge opportunity for access to credit. Huge opportunity. When it comes to lending and credit risk management, open banking provides a wealth of opportunities with applications like our application. It's called iApply. It's a loans origination system, and it streamlines processes, it has enhanced decision-making capability, and improves customer experience. I have another question. Does anybody want to volunteer? Okay, not now. I'll ask at the end. So we've seen these headlines everywhere. And I don't need to talk into these. We know there's a problem. Non-performing loan, banks are struggling, people are not able to pay, and there's a whole lot of reasons for this. So the solution that we have, which is iApply, embracing the technologies that I've talked about on the open banking space, allows you to, go through the lending cycle involving multiple stages for application of, and disbursement of loans right at the end. I know my time is running up. I'm almost wrapping up. Then we have another solution. It's called Arotron. Very important solution, and this is for debt management. Sometimes you do your lending, the risks are huge, and those are the risks that come with open banking: the risk of lending and the risk of credit risk management. So open banking has emerged as a transformative force that, like we have discussed, and when it comes to lending, access to comprehensive financial data, the solution that we have enables lenders to gather detailed financial information about borrowers and from multiple sources, with the impact of facilitating more information around loans origination decisions. Then we have the real-time data analysis, very important. As you provide the loans, do you have up-to-date financial data, such as, income streams, transaction history of this person, and so on and so forth? The impact here is speed. I come for a loan today, I want that loan in the next second, if possible. On the side of risk management, access to comprehensive financial data, you want to understand, to have a detailed view of the borrower's financial behavior, and their history and so on. Real-time data analysis, so that you can understand, how you'll monitor this person's, financial health, and then enhance credit risk assessment. The banks want to do this, and of course, regulatory compliance. The whole debt management tool allows you to manage regulatory compliance. I will skip that because it's just what I've said, and I'll go to my last question. This is my last question, and I hope I can get it. Oh, this is us, by the way. Been in Kenya for the last almost 10 years now, but these are the statistics about our company. These are some of our customers in the continent and out there using our products, Arotron. loans origination. We also have a core banking system called Profits that we do. These are some of our NPL servicing guys who buy the debt from the banks and run with the debt. It's not yet in Kenya, but it is a big thing out in Europe. They're using our solutions. These are some of the partners we work with. If any one of you is using Atlassian and you have Jira systems, talk to us. And of course, these are some of the things. And this is my last question to you. Look at that and tell me, what does this bring to mind? Okay. And I want to put a context in this. Remember, we're discussing digital financial inclusion, digital transformation. So don't talk about leadership and management and, okay, context. Just tell me what you think. There's no right answer, by the way. What does this say? This is my last slide. Anybody put up your hand? What does this tell you? This guy, my profession has just probably transformed again just since we started this session. Oh, there you go. Please. Yeah, gentleman in a blue shirt.
Yeah, it just shows change is constant.
Yeah.
We'll keep on having change in our lives.
Yes. The guy looks defeated, isn't it? He's whining here, I just wanted to say, okay, the essence is, we're in a very complex environment, all this digital stuff, and we're all trying to figure out the regulators. Sometimes we're ahead of them, and they're catching up, and we're all, trying to understand what is this open banking and how can we, leverage. So this whole thing is about balancing the pursuit of innovation with management of risks and ethical considerations in this era where change is the only constant. Thank you very much. I appreciate your time, and I'll bring your gift to you. Thank you, everybody.